The gold market globally operates on a fractional levered system, and we're seeing some of that start to crack right now with the amount of deliveries. And that system basically operates where a small amount of physical metal backs large volume in paper claims. That's the rehypothecation that you speak about. In other words, each ounce is sold over and over and over and over again. So far, over 10,000 COMEX silver futures contracts have stood for delivery. 10,000. At 5,000 ounces each, that's more than 50 million ounces of silver that have been taken off the exchange, including 565 contracts or 2.8 million ounces in a single day. So over 60% of the COMEX registered silver was claimed in just the first 4 days of trading in the 2025 December contract.
The global gold market relies on a highly leveraged paper system where limited physical metal backs massive claims through rehypothecation. As delivery demands rise and central banks repatriate gold, trust in paper gold is eroding. Investors are increasingly turning to fully allocated tokenized gold, which could accelerate an unraveling of the paper gold market and reshape the bullion system. Before we go to the interview, please like the video and subscribe to the Bullion Vibes for more informative content.
You know, the gold market globally operates on a fractional levered system, and we're seeing some of that start to crack right now with the amount of deliveries. And that system basically operates where a small amount of physical metal backs large volume in paper claims. That's the rehypothecation that you speak about. In other words, each ounce is sold over and over and over and over again because no one ever stood for delivery. And that's why it's worked for decades, because few ever did. In fact, when you and I start talking about the others in 2020, the group on the COMEX that was standing for delivery, that was the central thesis of everything I was saying. You're like, this is so weird, Dunnigan, because all of a sudden, it went from 0 to 100, where no one was standing for delivery. Now you got this big group standing for delivery. But now you have central banks repatriating gold. Remember all the banks that we talked about, the German Bundesbank, the Dutch National Bank, the Bank of Austria, Hungary, Turkey, Poland, the Czech National Bank. They all repatriated their gold from the Bank of England and the New York Fed. It's about trust. And investors now are shifting, as you mentioned, to this tokenized gold. And the more I dig into the offers or to the possible opportunities that have been presented to me, the more I began to think, yeah, this may actually have a profound effect because it gives fully allocated and instantly transferable and fungible ownership of the real metal. Not only does this undermine demand for paper gold, which is, I think, been exposed by much of the world. They see the rehypothecation. They see the Achilles heel of the system is standing for delivery. It also gives very intriguing options for collateralization of your metal that many of us who have, you know, a large portion of your assets in gold and silver come to a point where you want to buy a home or you want to do something, you need collateral. And the banks, well, you know, how do I know you got metal in your closet and blah, blah, blah. It's not, you can't use it. This does. But what I could see happening actually because of this transparency and because of this instant validation and transferability and collateralization, I think you could see a lot of investors exit the paper system for allocated tokenized gold, at which point the system could face that sudden collapse triggered by unorderly unraveling of unhedged rehypothecated exposure. And I think the bottom line is that tokenized gold is not just a new form of gold or better gold, whatever people want to call it. It's a potential catalyst, to this gentleman's point, for the collapse of the entire paper gold system. I agree with him because paper promises that have been exposed for being BS, I think this is the antidote for it. And if done properly, could rewrite the entire ecosystem, if you will. I think it's very intuitive question, and I am inclined to believe it.
Gold and silver are entering a critical phase as physical demand accelerates far beyond normal market flow. While prices have risen sharply over the past decade, the real signal is in delivery volumes, with tens of millions of ounces of silver being removed from COMEX inventories and growing signs of tightness in London. Major nations are locking up supply at the source. Silver has been designated a US critical mineral, and AI, solar, and national security needs are driving structural demand. With massive paper trading masking a deep physical deficit, institutional accumulation is intensifying, setting the stage for shortages that could rapidly spill into the retail market. Now, let's back to the interview.
Yeah, I mean, on a bigger picture first, I mean, look, the trend is here. And the thing is, mainstream doesn't notice the trend. And I think maybe even the people who watch this show don't really realize how big the trend is. Over the last 10 years, price of gold has gone from 1,100 to 4,200. That's a 256% increase. And price of silver has moved from 13 to 57. That's a 315% increase. But I think the real trend right now is in deliveries, like we were talking about. Something big is happening on COMEX. I've been screaming that forever, right? And in the December contract, which went off the board 29th, a couple days after maybe the day after Thanksgiving. So far, over 10,000 COMEX silver futures contracts have stood for delivery. 10,000 at 5,000 ounces each. That's more than 50 million ounces of silver that have been taken off the exchange, including 565 contracts or 2.8 million ounces in a single day. So over 60% of the COMEX registered silver was claimed in just the first 4 days of trading in the 2025 December contract. The demand for physical metal is massively accelerating. This is not normal flow. This is institutional accumulation. And I think that this is something that cannot be overlooked. It really can't be. At the same time, you even have Reuters coming out and saying that the London silver tightness or the liquidity crisis is real. And it's happening. And so you're finding cracks within the system as you see massive shortness and demand for delivery. At the same time, you have countries like China and India and Saudi Arabia and Russia that have been accumulating silver, taking possession of silver and gold, reintegrating it into their system. We're seeing China, the second largest producer in the world, as I've said on your show 1,000,000 times. They're going to Mexico and Peru and buying doré and concentrate before it even hits the market by buying this stuff in a pre-refined stage. So they're locking up supply at the source long before it has any chance of reaching the global exchanges. And so I think that this is putting huge stress on the market. Ultimately, will put massive stress on the market. And then you have the U.S. Department of Interior, who adds silver to the 2025 critical minerals list, as we've talked about. And in order to get on that list, by the way, the metal has to be essential to the economy or to national security. Should have a vulnerable supply chain and no easy substitute. So this creates strategic stockpiling demand, and again, and a structural tailwind for demand that's supported by national security and policy. And they should be worried about the supply chain and the geopolitical risk because the United States imports 2/3 of its silver. And, I was reading something the other day that blew my mind. It says AI data centers especially burn through silver. It says every server and power unit uses a little, but tens of thousands of machines lock up thousands of ounces permanently. And powering these centers is even more silver intensive. A 500 megawatt solar farm, enough for one major AI campus, can require up to 300 metric tons of silver or 9 to 10 million ounces. So all of this is happening while the U.S. relies heavily on foreign silver and physical metal is leaving the transparent markets. 75 million ounces have been pulled from COMEX since October. moved to stronger hands. So, yeah, I think that, look, here's another one. 583 million paper ounces traded on Friday. That's 75% of annual global mine supply in one day. And the COMEX had 103 deliveries and the LBMA 553. So, it's getting crazy. In China on Friday, silver closed above $60 an ounce. And so, we keep seeing the price higher in China, which is kind of pulling the price along with it. I just think that things are beginning to really, really, really change. And now you got banks like UBS who are vocal saying that the 300 million ounce physical deficit, and we've been seeing that every year between 1 and 300 million ounces going on the 6th year in a row, is turning them bullish. And they recommend long positions in silver they've never have before. So, yeah, I think when you talk about central banks repatriating gold and all of the stuff we've been talking about, standing for delivery, sovereign wealth funds, commercial banks, huge deliveries. To me, what this boils down to is that it will ultimately trickle down into the retail market. And it hasn't yet, but it will. And when it does, it will happen very quickly. Things will just become very difficult to obtain. It doesn't happen at the highest levels and then just stop. I think you'll see it move down into the retail market. It's interesting because on just about everything but American products, premiums are as low as I've ever seen them. The American products, they seem to be going higher and higher. But you will find, I think, that what is a easy to get, flush, supplied, laden market in retail very quickly will change. Not there yet, but I think it will, based upon what we're seeing around the globe. The retail public is just more or less asleep, and that's the truth of it. So, yeah, I think there's great values everywhere. Maybe the best value I've ever seen in my career is pre-65 silver, ever. But short of that, anything that you're buying right now in this environment, when the smartest money in the world is doing the same thing, is all you need to know. That's where the value is. The people who are doing this, the central banks, the commercial banks, the sovereign wealth funds, and some massive traders here in the U.S. who this is what really pisses me off. Nobody in the mainstream media has asked the question, who's doing this? Or even alerting the public that billions upon billions upon billions upon billions upon billions have come in since November of last year. For the last year, we see these kinds of inflows.
With physical gold and silver disappearing from exchanges and demand skyrocketing, is the paper market on the verge of a major collapse? Could tokenized gold be the game-changer investors have been waiting for? Drop your thoughts in the comment section. And if you found this insight valuable, like the video and subscribe to the Bullion Vibes for more updates. See you in the next video.